Welcome back to Hustle a Million, guys. I'm your host, Joshua Minot. And if you remember from my last episode, we actually went through your personal finances to see if we could find some opportunity to save some money in some places and then take that money to go ahead and invest. Well, today, I'm actually going to go over the top ETFs that you can actually invest in right now in order to start letting that money compound itself so you can ensure yourself a better financial future. So some of you guys might be asking, well, what exactly is an ETF? Well, an ETF is an exchange traded fund. To make a long story short, it's a portfolio of stocks. So let's say you wanted to buy some Apple or some Tesla, some Home Depot. Most people will go out and buy those stocks individually. Well, what an ETF does is it actually combines all of those stocks under one portfolio. So all you have to do is buy the ETF and it'll already have those companies included in the portfolio. In comparison, a lot of you guys actually have a 401k. Well, if you remember correctly, when you signed up for your 401k, it actually asks you what type of portfolio you wanted to purchase. It may ask you about high risk, medium risk, or low, but ultimately it's just gathering your answers to figure out how it's going to use your money and where to invest it. Well, that's all an ETF is, guys. It's a portfolio of stocks, except this time you're going to control your money and how you invest it.
So the first ETF, guys, is SPY. It's actually an ETF that tracks the S&P 500, which is the top 500 companies on the actual stock market. Now, if we scroll down here, I want to show you guys a chart and just to show you the history of the market. So we're going to look at a 20-year chart. And as you can see, you may notice a trend. Now, we can only go back 20 years, but what is this particular ETF always doing? It's always trending upwards. If we look, here's our housing market crash, if anybody remembers that, which was pretty devastating. But even after that, it continues its rise. And then here's our COVID situation, which completely killed the market during that point of time. And here we are again, completely rising. And right now, this is the bear market that we faced over the last year, guys. But what does this tell us? What this tells us is that this has given us another opportunity to buy while the market is on sale. Because what history shows us on this chart is that at some point, SPY will continue its upward trend upwards. So the next thing we want to do, guys, is we want to figure out, well, how much money could we have made if we had invested in this particular ETF over the last 20 years? So I'm going to come on over here to performance, and then we're going to go ahead and just scroll down. And as you can see, this actually gives us SPY's performance since it began. This ETF started in January 22nd, 1993. And since it began, this particular ETF has produced a 9.59% return on investment, guys. Now, if you remember correctly, guys, in my last video, we were able to find $150 that we could be saving based on our bad habits. And so now we're going to invest that $150 and we'll see what that looks like if we had to just put it in the S&P 500. As you can see, I've already got our 9.6% annual return rate. We're going to start with $150 and we're going to be adding $150 at the end of each month. And after 20 years, guys, we end up with $103,000. You would have put in $36,000 and you would have made $67,000 in interest. Now I'm going to go ahead and bump that up, guys, to 30 years. And here we see we're up to $288,000. You contributed $54,000, but you've earned $235,000 in that time.
So guys, after seeing that chart in those numbers, if you tell me, well, Josh, I can't afford to invest, my response is simple. You can't afford not to.
Now, if you remember correctly, guys, we were also able to find some additional money to put in our pocket by choosing a different vehicle to purchase or a different home to buy. And so what we're going to do here is I'm going to plug those numbers in to see exactly what that looks like if we had invested that money that we're saving. If you're not sure where I got these numbers, guys, go check out the last video so you can follow along. So for our vehicle, guys, we were able to save $420 a month. Again, that 9.6 interest rate. Let's see what we get after 30 years. A staggering $808,000. You contribute $151,000, but you earn $657,000 over a 30-year period. And lastly, guys, we were able to locate $300 from our mortgage payments or our rent payments. Plug in that 9.6. We're going to go for 30 years. and we've earned ourselves another $500,000, $577,000 to be exact. You put in $108,000, but you take out $470,000 in interest.
Now, before we get on to the last ETFs that I would actually buy today, I just want to say two things. Don't you wish they would have taught you that in elementary school, maybe middle school, high school, hell, any level of school? And secondly, don't say I never put any money in your pocket.
Now, the next ETF that I would buy, guys, is ticker symbol VOO. This is also the S&P 500. But this particular ETF is ran by Vanguard. And if you're wondering, well, where have I heard the name Vanguard before? If you're one of those people who are watching and you have a 401k, it's all likelihood that Vanguard is the one who's actually investing your 401k money. Vanguard is actually the second largest investment company in the world, guys. Now, as we scroll down to see their chart, we'll actually notice that this chart picks up in 2010. That would be the time that Vanguard actually started this particular fund. But as we can see, just like the similar chart before, it's just in a constant upward trend, guys. And so let's go take a look at the performance over that time frame. And so as we can see, as I stated, Vanguard started that fund in September 7th, 2010. And since then, they've gained an annual return of 12.96%, guys. Now, I'm not going to plug these numbers into calculator.net to see what that comes up with, guys. After all, I did just find you almost 1.7 million on our last example. So I'll let you plug these numbers in and have fun with that. Next on my list, guys, is ticker symbol VTI. This is also a Vanguard run ETF, but it is the total stock market, guys. And I mean, it's exactly how it reads. This is all US securities are built into this fund. So you're buying the entire stock market. So as you see, this actually is on that same upward trend. Looks very familiar, right, guys? Let's go ahead and scroll on over to performance and see what that would have gotten us over those last years. Now, it looks like Vanguard actually started this particular fund in 2001. And since then, it has produced an annual rate of 7.82%. Again, I'm not going to plug those numbers in for you guys on calculator.net. Go ahead, have fun with that, and see exactly how much money you could have earned in that time.
Now, what if I told you guys there was a way to invest like the greatest investor who's ever lived? Well, there just so happens to be a way to do that.
So the next ticker symbol, guys, is going to be BRKB, and that's Berkshire Hathaway. If you've never heard of Berkshire Hathaway, well, it happens to be run by Warren Buffett, who's arguably the greatest investor who've ever lived. And so this is not like an ETF, guys, but it is a portfolio. It's Berkshire Hathaway's portfolio of stocks. So every time Mr. Warren Buffett decides he's going to make a move, if you own some of Berkshire Hathaway, you've also made that move right with him. Now let's go ahead and see how Mr. Buffett has done over the last 20 years. Well, looks like it's another mountain for us to climb. So again, do you want to invest like the greatest investor ever? This is a no-brainer, guys. You don't have to pick stocks. He's going to do the work for you. All you have to do is buy a piece of Berkshire Hathaway, and you're climbing up that mountain with everybody else to financial freedom.
And before I announce the last ETF, guys, make sure you hit that like, subscribe, and notification bell and join this community as we gonna get to this money.
So the last ETF on my list, guys, is QQQ. This is actually a fund that's ran by Invesco. And what this is, guys, is it's actually the NASDAQ 100. So this is the top 100 companies in the NASDAQ. We scroll down below, we'll see its performance. Here we go with another mountain. And this dip, guys, is last year's bear market. So right now it looks like there's buying opportunity. If we come on over to performance to see exactly how they've done over the years, we'll scroll down and we'll see that this fund was actually created on March 10th, 1999. And since then, it has actually produced 8.24% return on investment. Now, also keep in mind, guys, as you see here, this last 1 year, it's down negative almost 15%. That's actually the bear market, and that's calculated in this particular number, right? So that bear market is also calculated into this 8.24% number, meaning prior to the bear market, this actually was a lot higher. And the reason why I like this fund, guys, is because I love tech stocks. Keep in mind, this is a very volatile ETF because it has a lot of tech stocks in it. However, it can also produce a lot of high-end returns for you long term. And if you're wondering what exact companies are in this particular portfolio, just come on over here and let's scroll down. And we'll see here are the top 10 holdings in QQQ. We've got Apple, Microsoft, Amazon, Nvidia, Tesla, Google A and C, Meta, which is also Facebook, Broadcom, and PepsiCo. And if you look at over here, it'll actually tell you the percentage of the portfolio that owns these companies. So just between Apple and Microsoft, 23% of the portfolio is just those two companies, guys. So as you can see, you don't actually have to go out and buy Apple directly or Microsoft directly. You could buy just some QQQ and you're already buying a piece of these companies. So before we get out of here, guys, I want to show you one added benefit for owning these ETFs. We're going to take a look here at SPY. If you scroll down, you'll actually notice it has a dividend yield. And what that means, guys, is for every share that you own of this ETF, SPY is going to pay you $6.32 a year. Okay, guys, so that's an additional paycheck that you receive just for owning this ETF. And this number is not calculated in the performance of the actual ETF. So this is a separate check on top of the fact that you may get a 10, 11, or 12% return based on how it does.
One of the main takeaways that I hope you guys got out of this today was that you need to start seeing yourselves as the CEO of your own company. And the money that you have, well, those are your workers. And every time you choose to actually go spend your money on some consumer products, you might as well be laying off a part of your workforce. What your job to do is to actually send that money out into the field. And when it comes back with more employees for your enterprise. Now, before we get out of here for today, guys, some of you may be wondering what platform I was using to show you these examples. I personally was logged into one of my TD Ameritrade accounts. But if you want to purchase these ETFs, you can either sign up for TD Ameritrade, E-Trade, Robinhood, Interactive Brokers. It doesn't matter. There's a million brokers out there, guys. Just go ahead, sign up for one, deposit some money, and that'll allow you to go ahead and purchase any of these ETFs. So that's all for today, guys. If you have any questions, please leave them in the comments down below. And if I've helped you at all begin your journey to financial freedom, I'd love to hear about it. Till next time, guys.